Hey guys, welcome to another episode of Investing Leech. Many of you were actually asking if I could show you example of how to build up a portfolio. So this is what we'll be doing today. But before that, you have to understand the three things: time horizon, risk appetite, and you. So have an idea of what you are planning out for. It may be for a house in 5 years' time, a renovation, for a baby, and what is your risk appetite like? What can you afford to lose? Is it 20% of what you have, or 30% when it comes to a worst time? And I'll be showing you an example of that. And I'm gonna take an example to plan for retirement. Okay. And over here on bankrate.com, there is a very interesting retirement calculator. I'll be sharing the link with you, yeah, so that you can plan out and exactly see what you need in order to retire. Okay, so for now, we are using a sample of me planning for retirement. I'm 30 years old now. I plan to work to 65, average income of 50,000. I plan to save 30% of it. I currently now have 20,000. I expect my income to increase by 3. And I think if I want to travel once or twice a year when I retire, I would like to have at least 70% of what I'm currently earning. And I plan for my retirement fund to last me for 25 years, for me to live to the age of 90. So at the chart at the bottom, it says, look, with 6% rate of return over here. Some of you may be asking, investing Leech, is 6 a lot? My insurance could not even pay out investment of 6%. Okay, so I would just like to show you an example of buying into index funds, saying that you're a passive investor, you don't know how to read stocks, you just want to buy an index of stocks. Let's look at S&P 500. Okay, if you look at the 1 year return, it's 10% easily. Okay, and even on a bad year, say I started investing in 2002 with a negative 22%, eventually if I were to continue to hold my investment to 12%, a 10-year return will still be positive. Okay, and it's definitely more than 6% on good days. So um as you can see, at the end of retirement, I actually have 2.4 million when I retire at 65, and it's good enough to last me through the years, as I still end up with a surplus of 777,000 at age 90. Okay, so now knowing that you have to make a rate of return of 6%, you have to then plan out what exactly should be the type of investment that I should go for that should give me 6%. Okay, so for me, let's look at the sample portfolio from last week. On Stashaway, they actually recommended for you to be, if you are aggressive investor, you can go on to look at equity sector of 41%, means buy into stocks of 40%, and the rest can come in terms of bond. For equity sector, like I said, if you are a passive investor, you can just look in to buy in index like S&P 500. Okay, and if you are looking at bonds, okay, you can buy in things like Singapore saving bonds, okay, which I think the current rate this month is 0.8%. Okay, it's not a lot, so I actually come across Stashaway, one of the recent program that's there is called Stashaway Simple. Now they project it at 1.9%, that allows you to redraw and deposit fund anytime you like. Okay, which I think is quite a decent yield as compared to currently now with the banks all cutting out the rates for the yield for the savings account. So you can consider this, okay, and look through what they are offering, okay, which I think is a good alternative to what there is out there in the current market. Okay, on the part where we are looking at 30%, okay, of bond allocation. So to start a simple one, it can just consist of three things: the equity sector, okay, where you can just buy into an index like STI or S&P 500, and government bonds or corporate bonds, you can look into something more conservative like uh Stashaway Simple that will just give you 1.9% regardless. Okay, and maybe you can just keep aside of 10% for cash in case there's a point where you see that the market is really bad and you would like to put in to catch the low. Yeah, so that's all for today. I hope you have a clearer understanding of how it's like. I will recommend and put down the links of whatever I've shown you today. And yeah, do go ahead and play with the calculator to have a rough understanding of how much do you need to plan out in advance. Yeah, and that's all for this episode. Hope to see you soon.